Most beginners lose money because they jump straight into indicators or trade signal without understanding what price is actually doing. If you can learn to read market structure, you will start seeing the market differently. In this video, I will explain market structure in the simplest way possible. The first question you have to ask yourself and why we are here is, what is market structure? Market structure is simply the way price moves over time. Price doesn't move randomly in the market. It creates pattern. Either a high, a low, a high, a low, a high, a low, a high, a low. These are patterns in the market. Or price is moving on a bullish trend, which is, we call this a lower low, a higher high, a lower low, a higher high, a lower low, a higher high. All these structure cycles help us to identify if the market is actually bullish or bearish. Knowing when the price action gets invalidated, it helps us know if the price action has simply changed from what, a bullish market to a what, to a bearish market. This is what the structure help us to. It help us also to identify if the price action is in a range. You get me? A range is a cycle where the buyers and the sellers doesn't have a say in it. You get me? It's a consolidation range where the buyers doesn't have a say in the price action. So that's that. You can see structure is actually the key in trading. So without you understanding or able to identify what structure is in the market, I'm sorry, you're going to have a hard time learning how to be profitable in the forex market. So with that, if you don't understand market structure, every other trading concept becomes what's harder to understand. Before learning entries, before you learn your liquidity or risk management, you need to learn how to read price. So in my next videos, I will explain to you exactly how to identify trend using what, market structure. Stay tuned, like and subscribe and for my next video.